Zoom, 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 we're going to the moon.
There's been a lot of talk recently about digital currencies, and everyone's got their own ideas of how we should do it. Now we have Representative Lynch coming out and putting forward the Electronic Currency and Secure Hardware Act, also known as the Ecash Act. The idea is to create digital dollars, but use many of the same aspects of physical cash in a digital form. Ultimately, what this legislation is trying to accomplish is it's trying to take all the ideas of physical cash and digitize them. But of course, the first thing that people ask is, why is legislation being put forward to create these digital dollars? Isn't this just what a central bank digital currency does? They explicitly call out and say eCash is not a central bank digital currency. Ultimately, I don't know whether it's going to matter or not, because what we have seen is that the current versions of digital dollars and stablecoins, whether we are talking about Tether, USDC, or UST, about $200 billion in the market's doing just fine using them as digital dollars.
Grayscale is threatening SEC with legal action if their Bitcoin ETF application is rejected. This is interesting. We've seen a lot of these ETF applications get rejected as soon as they get one through. A spot ETF here in the US will make it so much easier for people to buy Bitcoin at the reasonable price, the actual price of Bitcoin, and it will take so much off exchanges. It's going to be extremely bullish whenever that happens, and I think this is a good sign for crypto investors that they're starting to put some pressure, because there's really no reason that the SEC should continue to reject Bitcoin ETFs.
Deutsche Bank said Instagram's NFT efforts could lead to mainstream adoption. The move by the tech giant could legitimize NFTs, Deutsche Bank said in a report. Twitter is looking to integrate NFTs, YouTube, Instagram, Facebook, and so forth, but they're saying the Instagram one could be a huge catalyst for mass adoption. Now they're talking about not just crypto, but digital assets and NFTs and metaverse now, and how billions of dollars are going to be made and yada yada. We saw it with Ray Dalio, we saw it with JP Morgan CEO Jamie Dimon, we saw BlackRock CEO Larry Fink talk about this, and now all of a sudden they're all ready to invest. It's just amazing to see all these big time players capitulate, and now they're all bullish on crypto and NFTs and so forth. Guess what? The fact that they're putting this info out, they've already taken a position.
Another one that is moving is, of course, Chili's, and that is based on Lionel Messi signing a $20 million deal. This is going to basically be the face of Chili's, which I think is really good because of the socios connection to what Chili's is trying to do from a sports aspect, especially as it pertains to soccer. And I think just football in general, not American football, football in general, the size and scope of that and the opportunity that I think Chili's brings to the table, especially in the sports scene, could be one of the early adopters. And now Chili's is going to add to the new sports tokens as a possibly become a go-to place for all sports fans. This is where I think it gets interesting. This could be a big deal, especially if we start to see some very interesting creativity around where Chili's could be going.
NFT adoption. Tokens take the runway at Metaverse Fashion Week. The metaverse may be an emerging concept, but the impact the virtual game-like worlds can have on the trillion-dollar retail industry was recently demonstrated during Metaverse Fashion Week. This entirely virtual experience was held from March 24th to 27th, 2022 in Decentraland, a decentralized virtual social platform on the Ethereum blockchain. The online event attracted more than 70 brands. Avery Baker, president and chief brand of Tommy, told Cointelegraph that Tommy Hilfiger brand has been curious about new trends and technologies, especially those that allow the label to connect with consumers in a unique way. And it makes sense that the high-level fashion designer wants to get involved in Metaverse, because as they see where this is going and people are starting to care more about pictures and video game costumes than what they're wearing in real life, makes sense that this would be the frontier that they would want to be breaking into. So Tommy is really bullish.
Goldman Sachs, which of course is one of the biggest investment firms in the world, has just put out a report in which they actually mentioned Ripple. And they specifically mentioned Ripple in an opportunity in payments section in their report, and described what Ripple's use case is and how it's actually being used. They talked about how they were set up to do cross-border payments, how Ripple's set up in 55 different countries, and it's a way for the banking sector to actually reach the unbanked and reach the otherwise difficult or expensive to reach with monetary offerings and payment offerings. Some really interesting stuff. I think you're going to start to see headlines like these more and more. Now you have Goldman Sachs talking about Ripple, and of course you're going to start to see headlines of more and more private investors loading up on XRP, because right now it's a great time to accumulate.
If you look at US investors, 11% own gold, 56% own stocks, but both have been stagnant over the last 3 years. And guess what has tripled within the last 3 years? Bitcoin. Now there's more US investors that own Bitcoin, and pretty soon that number between Bitcoin and stocks is going to get closer and closer and closer until it's 1-to-1. Eventually you're going to have all stock investors that will own some Bitcoin. It just makes sense. Basically, we're the same amount of users, Bitcoin users, as internet users back in 1997. You get my point. Again, very early indeed, and this is not even talking about Web 3.0 and Metaverse and games and, NFTs. This is just counting Bitcoin. Imagine everything else.
Wall Street investment bank Cohen Inc. has debuted a new digital asset unit that will be offering spot Bitcoin and cryptocurrency trading to institutional investors. The Finance Hub seeks to embrace the burgeoning asset classes spot markets. Goldman Sachs executed its first over-the-counter Bitcoin option trading last week, trying to plug into derivatives-based offerings as uncertainties and complexities around spot products hold back developments. Cohen's new business unit will mainly target the bank's hedge fund, mutual fund, and family office clients per the report. Banks, of course, continue to jump into the cryptocurrency space. They know exactly what's going on. A lot of them feel as if they have been left behind simply because they made fun of the space for so long, and now they're desperately trying to accumulate as much Bitcoin as they can because there's a very finite amount, and the other companies are also accumulating it as well. So cool!
Google searches for Ethereum merge have hit an all-time high. So the interest for Ethereum's next upgrade, the biggest upgrade, is clearly there. According to Google Trends data, in the last fortnight, people worldwide have been so keen to find out more about the Ethereum merge that the search term has peaked in popularity everywhere at once. For those of you who follow us on Twitter, there's a link down below. You saw this information first. This is everybody worldwide that is searching for Ethereum merge. And as you can see, we have hit an all-time high, and the interest is only growing. This will be a huge part of crypto history